What's up, guys? I'm Mike from StockedUp, and welcome back to the Stocks with Mike and Tom show. First and foremost, happy Thanksgiving to everyone. And before we get started in this video, it's going to be a little bit different than most. Tom is traveling, and he's having a little bit of microphone problems, so the video is going to look a little bit different and sound a little bit different than most videos, but we still have the same information as always. So thank you guys for tuning in, and happy Thanksgiving. In this video, we're going to be covering what major news happened in the market for the past couple days and the main plays that we're watching for the rest of the week. And just a quick reminder, tomorrow, Friday, is a half day in the market. The markets are going to close around 1 p.m. Eastern time. So if you guys are new here, don't forget to subscribe to see our videos on your YouTube homepage every single day. But with that being said, Tom, what's going on in the market right now?
Yeah, some big things going on are that Disney is going to be increasing layoffs to 32,000 workers as coronavirus batters its theme park business, according to CNBC. They will lay off 32,000 employees in the first half of 2021, which is a crazy amount of numbers. 32,000 employees laid off over the first half of the year. That sounds like a lot of employees. And the figure includes 28,000 workers that the company previously announced in September. So it's not too bad because it includes those old numbers, but still it's pretty terrible. And it just says that in addition, as of October 3rd, around 37,000 employees who were not expected to be laid off were placed on furlough. And the majority of these layoffs will be from its parks, experiences, and products division rather than its Disney Plus streaming division, which has probably been keeping it up right now.
Absolutely. So obviously it isn't the best news, but Disney's been doing pretty well lately. Like if we look on a daily chart, they're actually kind of exploding. They actually broke, or they actually got pretty close to all-time highs last week. They had a pretty solid week. They had good earnings recently. So it's just interesting news, and it's just kind of unfortunate to hear that. But also, I mean, Tom, we had that work and CRM news on yesterday too, which was Wednesday. WORK skyrocketed up about 38% on news that Salesforce, which is ticker symbol CRM, might be buying them. So that's obviously huge news. And I actually made a video yesterday explaining kind of how the merger movement, you can say, or acquisition movement happened. So basically, the company that is buying the other company typically falls. So in this case, CRM fell because they are paying a premium for work, and work rose because the current valuation is going to get boosted a lot if CRM actually does buy work. So if you guys want to know more information about this catalyst, you can check out yesterday's video. But I mean, work is skyrocketing. What do you think, Tom?
That's a crazy rise on Wednesday from $30 all the way up to $40 by the end of pre-market or the end of after hours. And that's just crazy numbers. I could not imagine that they went up that much. And just like you said, it's pretty awesome to see that work is going up off of this and CRM is going down, which is kind of expected because right now a lot of things happen that aren't expected. So I'm glad that that's actually happening. And it's awesome to see work actually going up off this news. And I didn't expect a 37% jump, but man, I mean, this stock is very volatile. And of course, any news with these smaller volatile stocks will definitely get them to run.
Yeah, it all depends on, if CRM actually does go ahead and buy work. I mean, these shares can jump up to $45, $50, but it just depends on where the potential buyout or acquisition is. So that's a whole video in itself, with, merger arbitrage and like valuing companies. Like, for example, like we could see like DNKN, there was news about them being bought out. And they went from about $90, and right now they're hovering about $106.49. So mergers and acquisitions are a topic for a whole video, but we're not going to get too deep into that topic right now. But they have a ton of momentum right now, and if CRM does come in with a great offer to buy them, this has a lot more potential. So definitely keep your eyes on that. So Tom, like what tickers are you eyeing out for the rest of the week?
The big one I'm really looking at right now still is Twitter. I'm also looking at WBA and INTC, but Twitter to me looks like a fantastic setup. They're really starting to fill that gap. And I know I talked about this on Sunday night, and you can see they had a couple green days and then finally started to pop on Wednesday up into this gap zone, you could say. And I think it could be a pretty safe trade back up to like $48. Once it breaks 48, then I would go for 50 and then 52. I just really like the setup on it, and it's breaking that gap. And it's just whenever you look at a daily chart and you see the setup on it, it looks like a good setup. Obviously some things just look good and some things don't, but it almost looks similar back to like the beginning of July, almost how they had this little run up here and then like a very slight consolidation and then more run up. I kind of think that that's what's going to happen here. It's just going to be a slight stair step effect up. So don't be surprised if Twitter does end up consolidating somewhat this week around the $50 level. But once they break that, then I think it could be even more bullish.
Gotcha. Yeah. So we called this out on Sunday's video. So Twitter is doing pretty well right now. So great job with that. And guys, again, I apologize for the audio problems. It's only for a day. So thank you everyone for bearing with us. But then WBA, Tom, what's going on with them?
Walgreens, yeah. Like you said, I really would have expected them to do better with the coronavirus, but you can see that since the virus really happened, Walgreens has kind of just been falling down ever since February/March, and even over the past couple of years, Walgreens is coming down. But over the next few days, Walgreens looks to have 4 green days right now, and it looks like they might fill their gap back up. So Walgreens, I think, looks like a pretty bullish setup as well. It just looks like a pretty good setup where we might see a possible larger than usual like green candle on them, to where we might see like a 3 to 5% move. If we do see a break maybe above the $40 level, I'd really like Walgreens. And then also we can go into Intel, which is another great stock. It's almost setting up the same, like they might fill their gap back up too. But this one's sitting kind of around a resistance around 47.50. So if they break 47.50, I think we could be pretty bullish on Intel, but just make them break that, because you can see how critical of levels Intel really is at. So if they break that, it would not be a good thing if you're holding calls during that time.
Awesome. So now let's get into our Discord member of the day. So since it is Thanksgiving, we're going to give our Discord moderator, Hunter, a little shout out. Hunter's always being a great moderator. I know he's in a tough position sometimes, but he's always trying to make the chat as neutral as possible. And he does a pretty good job. So huge shout out, Hunter, for everything he does, to keep the chat, how it is. It's nice, clean, and it's a great Discord community to be a part of. If you guys want to join the Discord community, it's the first link in the description down below. There's free day trades, and you can network with about 11,000 other members. So now let's get into our momentum plays for tomorrow. And we are eyeing mRNA. So that's the first one. They had a pretty good day on Friday, up about 10%. Tom, what levels should we be watching?
Yeah, go ahead and make them break the $116 level, and just watch for news on them with the vaccine also, as they've had a successful vaccine that might come to market.
All right, and then we have work.
Work, WORK, just like we talked about earlier. Make them pop above 41.
All right, and then we have FSR.
Make them go ahead and hit above $22, and this one's a similar play to work.
Awesome. And then last but not least, we have the powerhouse IPO stock, PLTR.
Ooh, Palantir. Everyone's talking about this one lately. Make them break their high of Wednesday, which was 29.75. And man, this stock has really ran over the past year. This is a crazy stock. I know a lot of people like it, but just since they've IPO'd, they've pretty much ran from $10 all the way up to $30 now. So just what a great couple months for them.
Oh, yeah. So now let's get into our unusual. Actually, let's go back to the momentum plays real quick. Just for clarification, basically, we are waiting for all these stocks to potentially break above the levels Tom listed. If they do break above those levels, we are eyeing those plays to the upside. So now let's get into our unusual options activity for tomorrow. And we are looking at the work 40 strike call options that expire next Friday, December 4th. And there was about $10.3 million put into that play. The options are in the money. Work has a lot of potential, a lot of momentum. And if CRM does come in and they come in with a great offer, this stock can go up a lot more, but it just depends. Like There's a lot, like I said, there's a lot of hype, a lot of momentum behind work right now. And like, let's say CRM pulls out and they say like, they don't want to buy work anymore, then this stock can tank. So understand it's a very volatile setup, pretty high risk, pretty high reward. So keep that in mind. But given that the options are in the money and and they're up 38% basically, I would have to say that they're longing them. What do you think?
Yeah, me too. I mean, they're sitting just under being in the money right now since it is after hours. But I think that come Monday morning they might see a lot more movement. I think that Monday is going to, or I mean, Friday morning is going to be a big telltale sign here. I think that in the morning in pre-market you're going to see either a lot of upwards movement or a lot of downwards movement. I think that might really indicate what's going to happen whenever the market opens, because whenever it pops like 37 to 40% like they did on Friday, you just have to expect them to slightly pull back, even if it's like a 5% or 10% pullback compared to their 40% pop. It's still nice to see that little 5 to 10% pullback that usually happens whenever these stocks pop, 30% in a given day.
True. And so now let's get into our comments from the previous episode. And with the first comment, we have Clinton saying, great video again tonight. Made some money on your CVX and bank calls last night. So thank you for that, and great comment. And we're glad to hear you profited off of those. Yeah, we actually had a lot of momentum trades this week with the oil sector, CVX, XOM, OXY, and then the banking sector, JP Morgan, Citigroup, a lot of bank stocks. So great job taking advantage of that. And with the next question, we have Anastasia saying NIO hasn't filled the gap down at 31 or 23. Do you see this happening? So I mean, that's over like down to 23. That's like a 50% drop. So I don't know, unless there's some crazy news that comes out with NIO, I don't see like a drop down to 23 happening. Like I said, unless there's some crazy news, but I can definitely see it pulling back. The first level was 31 that she listed. Even that's pretty steep. I mean, I don't know. I think maybe like the $35 level just by eyeing it out, but there's just a lot of variables, because news can come out at any time. So I think it's really hard to say. What are you seeing?
Yeah, I think that once we start seeing a lot more numbers come out of NIO and they start reporting more earnings, people I think will start to see, well, look, are they actually worth $50 a share, or are they being overhyped? And I think right now, I think they're actually worth $50 a share given how much, I mean, they're selling 13,000 vehicles per quarter right now, and they're increasing it to like 17 to 20,000 next quarter. So I think that they could have a lot of potential in the long run, especially since they're going to be increasing orders and they're in China where the market is just huge for cars. So I don't see them falling back to maybe 20, 23 or 21 like you said, but possibly 31. I could see that maybe, but like you said, 35 seems like a more realistic level, or even $40.
Yep. And then we had Sean saying, great video, go oil. Do you guys ever look at APA? So let's take a look. APA, yeah, they're doing pretty decent. I don't really look at them too much. Like normally when I hear oil stocks, I go straight to ExxonMobil. I go to Chevron and, even some other smaller ones like OXY. And there's a couple different ones. But normally I don't look at APA. What are you seeing with APA, Tom?
Yeah, it looks pretty strong over the past few days and the past couple weeks. It looks like it might continue running. It almost looks like an Exxon setup right now, or like a Bank of America setup. How we just have a nice pop and then two kind of green consolidation days at the top. I really like the stock. It's just pretty risky. It's pretty low in price, and you can see in the past how they've gapped from 25 and then went all the way down to $3 a share. So it's going to be volatile given the oil market. And I think that as long as oil goes up, APA will go up. But just keep in mind that whenever oil goes down, APA will get crushed, just like it did back here.
Yep. And then we had Juan saying, hey guys, what do you think of JMIA? So taking a look, they're doing pretty good. And even looking at a long term chart of them, I mean, they look pretty decent. They're not at all time highs, but they're doing pretty good. We could see that they IPO'd right around the $19 level, and they're breaking that pretty nicely. And then they ran up to highs of around $50. So I don't know. I think it looks pretty decent. What do you think?
Yeah, I think it also looks pretty good. It's just one of those stocks. It's just ran so much. It's had two like 20% days in a row. I would expect it to maybe slow down in the short term before popping again. But just keep in mind that this stock could definitely continue running, just given how like volatile it is and everything. And just one thing to keep in mind is that it's still not profitable. Like you can see their earnings per share down here. The stock still isn't profitable, but I would think that in the long run they could do pretty well. I don't know what they do fundamentally or what exactly they do as a company, but I do like the setup for the long run, but it's just so risky. I think it's another one of those stocks that have been pumping this year. And just keep in mind that, it's been pumping this year from $2 to $40. So if COVID, like let's just say COVID ends or we go back to normal or something, I wonder if that would affect a lot of these stocks that have been popping a lot since COVID's been, going wild.
Yeah, JMIA does a lot with online shopping. Some people call it like the African version of Amazon. So
Oh, okay.
yeah, so I mean, it looks like they're doing pretty good, but like you said, it really depends on what time frame. Like if you're looking to get in like for like a trade, I mean, it's up pretty big in like the past couple days. I'd probably wait for a pullback. I mean, it literally had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 green days in a row, like on a close to close basis. We can see that there was like one like red day on the 24th, but it actually closed higher than it did the previous day. So, I'm not sure what time frame Juan is looking for, but if you're looking in the short term, we'll probably see a pullback. For the long term, that's a different story, though. So, Tom, do you have any last minute stocks, options, or any insight for the markets right now?
The big stuff that I'm really watching is the banks. Like we've been talking about over the past couple of weeks, banks have really been killing it. And I love this setup on Bank of America right now. It just looks so strong with these two green candles here extending up above this long-term trend line. I just love that setup. And let's go to like a 15-minute chart. And you can really see how it's bouncing off of these trends pretty good on this chart. It might be hard to see because it's so zoomed in, but you can see how it hit this trend line and then is starting to pop. I really like the banks, and I think that they're sitting right around $29 to $30 on Bank of America. I think that if we pass that $29 level, we could easily head up to $30 or possibly even higher, like possibly 31 or 32. But just keep in mind, you're going to have good risk management if you do day trade this. I would say if you get into Bank of America and then Bank of America ends up falling, let's just say back down below 28.50, I might look at exiting the position there.
All right. Well, thank you for sharing that. And I just want to say thank you guys again for dealing with the audio problems today. Like we said, Tom's traveling and he's having a little bit of problems, but it's going to be the only day this happened. So thank you guys for that. We hope everyone has a great Thanksgiving. The markets are probably going to be a little bit slow tomorrow. Normally, in this type of scenario, when the market's closed on Thursday and it's a half day on Friday, normally the markets don't move too much, so we'll probably have a slow day tomorrow. But either way, if you guys have any questions, let us know in the comments down below. If you guys want to trade the same options as Tom and I each day, it's the Stocked Up Options Alerts link in the description down below. But like I said, any questions, let us know in the comments down below. But other than that, thanks for watching.